following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Let the printing presses continue in Europe. As we look at this, let's see. Let me read this off to you in case you've been living in a cave this morning. ECB cut their headline minimum bid rate to 0 from 0.05. This has taken the market by surprise, as we can see from the sharp sell-off in the euro, blah, 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 blah. Did that really surprise anyone? And Jay, yes, I'm glad that's not happening in the U.S. I'm glad we never turned on the printing presses here, thank goodness. Actually, you know what? We enabled the globe to think that on the same level that we thought, Jay, on that scene. Buying our own treasuries for 7 years. So who are we to talk badly about somebody else rigging the system? But, again, the euro, just looking at the technicals here and getting away from the drama, this 109 has been a big area for me. I mean, just to kind of put this in perspective, you go back in time and you look at the euro, and not to beat a dead horse from back in July 2014. That was about the time we started this show, by the way. A date that will live in infamy. Anyway, so as we looked at this breakdown below 135, and by the way, I think Tommy now is posting a pre-market video I do on the TFNN website. So I think it might be visible up there now. So I did it on the XLU, kind of relative to all this going on here in the thirst for yield. We've been talking about that for a while. But looking at the euro, 135, that breakdown happened on the long term. We hadn't had, in my opinion, except on some smaller time frames, really many reasons on a long-term basis to look at this in a buy situation. We have had some opportunities going back into the daily. If you go back in time, and I haven't got a ton of history on this chart. I'm sorry, I've only got 160 days back. But there have been opportunities to look at this from the long side and to stay away from the short side on an intermediate. But if you watch this show a lot, I kind of look at longer term setups and look at quite a few instruments to try to increase the sample size. Because when you're doing statistical analysis, I mean, if you have a small data sample, for instance, in our talk, like you're looking at the S&Ps, the dollar, and the Bund or something like that, your sample size is so small. If you this is my opinion, if you spread things out and kind of wait for these setups to happen on quite a few different instruments, i.e. looking at the scanner, your data sample is large, and then your probability techniques, if you will hopefully play out because that data sample size is relatively large. So looking at the long term on the euro and kind of considering this is one of the things that we look at from a long-term standpoint, this recent weekly profile that came out that I haven't actually been speaking of, but it's been plain as day in the scanner, this 110.43, and I'm not a big fan of rolling the dice before announcements, but we kind of clipped that up top here twice, ramped up to it, coming off. Your targets down below now are, and this is our long term, are 107.76 on the euro. Doesn't have to happen today, but I really feel like this entire fair auction is going to be explored, and in my opinion, closes on a weekly below that. Then we're going to be able to look at that as just chopping it on the short side, 107.76. Okay, so that's the situation on the euro. Obviously, this is going to have that relatively large inverse relationship to the dollar. I'm looking at the March contract on the dollar still. So Been hesitant really to get short this in any big way. This has kind of been something that is a sideways or long situation in my mind. So as we look at this, here's our daily. We're getting back above 98. Now that's going to be acting as support for a long play, continuing to go north, considering that I think the euro is going to continue to go south. We're looking at I've got the March contract up still here in the S&Ps because eSignal's continuous contract is still on March. I know today's the roll day for the S&Ps, but we're going to continue to look at March here. So again, we had a really cool situation happen already. We talked about this close above, then go back and retest. That's the kind of don't chase it, powerful, high probability trade. We reached a low of 1976 on this move down this week after the close above last week, and then we've got 1975 obviously sitting there. So we're up 30 S&Ps from that pullback, which has been kind of cool. And the good thing is when you wait for these pullbacks, I don't talk about this enough. This is a great situation to orient stops around you, and then you're really putting the probabilities in your favor. We'll be right back, guys. We'll continue to look at the fallout from the ECB new printing press statements here.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show, and we're going to take a look at the S&Ps, a little bit different time frame here. We looked at the weekly unfair highs that 1975 got down in 1976. Case in point, what Joey was saying the other day, so a lot of times you don't want to miss the trade and be sitting there. A lot of people get caught up in this, by the way, trying to save a penny and miss out on $1, or a lot of times, well, the inverse of that is, these guys who are trading options, selling premium naked, they're getting pennies and nickels, and all of a sudden they get hit for $1. Don't get caught up. I hate that. I hate that trade. Don't, and you look really cool and really right so many times if you're selling premium, and then they, as Tucker would say, they back the truck up and put you inside of the truck and take you away. Anyway, talking about that 1976 case in point, what Joey was saying, on these long-term trades and long-term inflection points, those are neighborhoods, and sometimes they're hit to the tick, sometimes they're not. A lot of times we'll use them as stop-oriented situations, which is great, but he was kind of looking at that 56 area the other day. 53 was the mark. Just didn't want to miss it in case it got near it. So similar situation there, but now what do we do? Caught a good ride up. We talked about a 35, 40 point move here. Now we're up into, and we're going to hit the DAX in just a second, but now we're up into the unfair highs on the daily. So that's your kind of target. That's your first situation. Now you're going to have to wait and see. I mean, this could get kind of carried away of people this morning going, oh my God, the party's still going. Thank goodness that Europe is blah, blah, blah. So now you just got to wait and see. You've reached the targets. These targets are at, and I'm going to show you this in the scanner. I show you visuals on the charts all the time. I was looking at the XLU this morning, just incredible. Could have a sector rotation today, but we're going to get into that in a little bit. Let's go into the futures for a second. And let's look at, by the way, I can't wait till they get this thing on the index screen, indices screen. So there's that, it's saying top right there. So there's that 207.50 or 2,750 right there. That's why it says top. So if I go over here to the landscape view, I always think somebody's looking at me. I'll look behind my, anyway. So there it is. There's a 207. There's a level in the market. Here's all your profiles in one glimpse. And then here is the chart that we're looking at. Man, they did a really cool job getting this in place. And here's your different time frames there. So again, let me read the den here. Okay, so we're going to hit the DAX in a second. But, this is kind of where you just have to just wait and see now. I'm not so big of a fan of shorting the S&Ps. And again, Joey and I talked about that. It's like, what's the MO here? What's the leverage? The leverage is on the long term, we've got this situation. We've got it on the June contract. I'll show you that too. But, again, this is kind of a buy support situation, and take it off, not necessarily reverse the trade at these things. At these inflection points, this is just the top of the fair auction. We may go past it, so be it. But you don't want to get mixed up and then be short for a little small trade, and then I got to cover, and then I don't want to cover. I want to double it. There's all kinds of things that can happen. You want to trade with the long-term MO, in my opinion, and that's what Joey and I were talking about the other day. It's a great statement. So let's take a look at the DAX here. Very similar situation. Don't have a lot of profiles on the long term here, but we've got some to pay attention to. 99.73. That's basically the 10,000 general area. So we've touched it. We come back. We kind of ramped up again. But here's so-called breakout on the daily. But I wouldn't get too carried away with this. You've had a good run. You've had another spike up on the DAX, but you're getting into now 99.73. We're trading 99.37. I think we've hit, let me see if we've hit 99.73 high, 99.87. So we got into that neighborhood and they're starting to back off there. 10,000 is a big number for this. I think we hit, what is this? 12.5 points from 10,000. The unfair high on the weekly is 99.73. I think, again, this is like the S&Ps. This is kind of a wait and see situation. You know, a lot of people could wake up this morning and, oh my God, you know, the party's on, like we talked about. And then institutional guys are just unloading where they had braced for something like this. So, you know, be prepared. We're at some resistance areas here on both of those indices. Okay. All right, so let's take a look at the notes really quick, just to kind of get around the globe here. Let me see. Sorry, guys. And we're going to hit gold really quick, too. Man, I'm sorry. There we go. All right, so talked about this area here, 129. That's holding, which is probably going to bode well for the utilities. And then this 129, this new profile on our daily that kind of got put in force here. That's the big number. I'm a little, you know, I'm a little more range boundish on the long term on the 10 years. So I'm looking at this as a chance to try to pick up something at support. I know Tom's been, you know, hoping this thing falls through, and when and if it does, it's going to be a very, you know, violent event, because this is kind of Custer's last stance on both of these time frames. If you go into the scanner, I'll show you really quick. You go into the 10-year. Where the heck is it? There's that bottom. We're near the bottom on this one too, 129.04. So again, you know, it's showing that you're right at the bottom of these profiles on the scanner. Now, what I want to do next, and I'm just, let's see, going back and forth here. Okay, I want to pull up the utilities here. Let's see where we're at pre-market. Again, we're trading up again. This is our 60-minute. Let's see, this is March 10th. Yep. All right, so, you know, these things require, historically and traditionally, for there to be a competition between that treasury yield and the thirst for yield. And this is an incredible setup. I mean, I am just completely blown away. And this is why I'm not exactly with this particular instrument opening up again, market opening up. I'm not so sure that 2007 area is going to be the limit for today on the S&Ps. And with the bonds and notes sitting and kind of doing what they're doing, you know, the XLU, in my opinion, is still not to be sold. The good news is you can use these 240s to regulate this trade. You're considerably well above that unfair high on the daily now, but you got 240 support at 47.60 on this trade. We'll be right back, guys.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. I've got Apple up. We're going to take a look at gold in a second. Want to just kind of walk through this one. Obviously, you know, the breakout after 97.63, just, you know, kind of in no man's land between that 104 and 97.63. Well, we got up to 103.75. Again, in the neighborhood, not to the tick. And why is that important? Got into that 104. These are all in the scanner. Let me go to Apple. There's that 104, if you can see that mouse over there. And we go into there, there's the weekly chart. Boom. I'm showing E-signal charts right now. But, you know, market's up a little bit. Everybody's partying again. We're at 206, 2,000, up 17 points on the futures. We've reached that 2007, kind of backing off a little bit here. Apple pre-market, it looks like, and again, I don't know if I have real-time stock quotes on this server. Let me see here. Oh, you know what? We have them on our machine here. Okay, so 101.88. Yeah, looks like it's about the same. So as we look at Apple, 102.11, great, cool. I do have real-time quotes. Wow, okay. As we look at Apple, 102.05 is that unfair high on the daily now. So you've kind of gotten into this. You haven't explored any of this fair auction. You don't have to. But remember, the points that you've got to keep in mind here, and in my mind, you know, Apple, again, not the strongest stock in the world, and below profiles on the weekly, and have kind of ramped up into 104 and fallen off again. If you're looking for something to short, not the crazy best short out there in the world, but it's something I think has shown itself, and especially lately in the past couple of sessions, you've got a lid at 102.05. You can kind of leverage against that, and then, you know, based on your appetite for risk, you could use that as a collection area up into 104 on the short side. But again, my plan would be to just kind of use a stop. If that gets hit, try it again at 104. I think, you know, this is something that's still got some issues to go through evidently so. And, market kind of busting out here, yet being at 207, a little bit of a lid here. I think Apple could come back, but you got to put the stops in. I get about a zillion emails about that one stock every day. As we look at, I want to go back to gold really quick. The ever-present gold. All right. Here's our 240s. Had a little bit of a move up this morning. I'm not super, bullish on gold until we get another daily close above 1253. I know there's been some trading opportunities this morning off that announcement, considering that's a relatively inflationary type situation, and gold rallied on that anyway. But we're just kind of coming up into this 1253 situation here. I'm not a big fan of shorting this right now. I think it could ultimately explore this entire fair auction at 1218. But again, a daily close above 1253 is going to mean a lot for this. And then I think you can kind of say, okay, well, it had to pull back. If you didn't buy support somewhere on lower time frames, so be it. But now you've kind of got a stake in the ground. And right now, I think this is kind of general noise. And that's just my thoughts on it. All right. Okay, we're gonna take a look at some. Let me go back to the scanner for a second so I can point these out. Now, on a day like today, let's see. I'm sorry. On a day like today, the Netflixes of the world and the Amazons in the world are obviously going to have some volatility. As we look at Netflix, and again, kind of, in my opinion, doing a little bit of sympathetic move up, we've got, 98.92 pre-market, so we're almost up in this 99.82. That's going to be somewhat of a lid on this. And the S&Ps could easily go past 2007, and you've got to keep your eye on that, because that's kind of forcing people to start covering again on the S&Ps. But as we look at this 99.82 on Netflix, that's going to be something where, might be a trading opportunity. It's not been the strongest stock in the world relative to that bounce in the S&Ps on a relative scale. So I'm looking at that as a little bit of a short on this particular stock. Taking a look at Amazon. Okay, so this is a long-term on Amazon, just really in complete, huge, mega-wide profile here on the long term between 651 and 496. That's incredible. But you've got some things to look at here and pay attention to. So I want to show you. We pretty much kind of piled back in here, retested the unfair high 569, 548 down below, reached a low of 550. Very close. Now we're just in the middle here again, and pre-market we are at 565. So we're ramping all the way back up into this unfair high at 569. In my opinion, keeping in mind that S&P 2007 number, you got a chance to short both of these around those unfair highs on the daily when it comes to Netflix and Amazon. And again, these are trading opportunities. They're not long-term investment shorts. Here's the S&Ps again. I'm going to go back to that. We're sitting here crowding this number, which is concerning for shorts. But again, I think, this is proving to be a little bit of a lid here. And if you want to short this, you've got you can put a relatively tight stop, a little bit of a noise level, and hopefully, this thing will kind of bounce around the fair auction a little bit today for you guys trading short term. All right. Let's get back to crude really quick here, another piece of the puzzle. This is wild how this really, kind of ramped up, came back and retested, provided that high probability trading opportunity when you can put some stops relative to these inflection points after it goes. These are like great don't chase it type things. We talked about this when crude did that the other day. Came back and retested 36.28 almost to the tick, and then ramped all the way back up until that unfair low on the weekly, which is right here. So that unfair low, 38.50, we reached a high of 38.51. So those daily unfair highs and weekly unfair lows, a little bit of a range-bound situation. I think lofty aspirations on this are 41.82. I'm completely out of crude oil right now. Just think we've had an incredible run up in a short amount of time. Remember, we've gone from like the 28s up into 38s. Put that in perspective, that's over a 30% move the last month. So we'll be right back, guys.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out, and throughout the week when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, guys. Welcome back to the show. Taking a look at ExxonMobil, trading 82.88 looks like pre-market. Talked about this yesterday with Tom. The week high print has been 84.46. That previous weekly unfair high, 84.29. So, again, that's what we talked about. Our ultimate targets were on this trade from the bottom around 70. What is this, 73.29 previous profile? We got a new profile now. which is kind of edged down a little bit. So new lid on this, 83.44. I think crude's going to relax a little bit here, as I just talked about. I'm out of crude oil totally, and 83.44. Orient stops around that. If you're looking for a little bit of a trading opportunity, in my opinion, this could be something to keep your eye on. Again, trading 82.88 pre-market, so keep your eye on that one. It's been a heck of a run for a big stock like that. Just incredible. We're going to take a look at a couple other stocks. Let's take a look at ICE. Markets that are ramping up like this. We got a print this morning. No, not yet. You know, this is something. Oh my goodness. This is something that could easily get down to 223. We're trading 229 right now. I know that's not a long ways off, but a lot of times these things have a way of overshooting themselves. And looking at the daily on this is something in the scanner that just doesn't want to get out of its own way. I know there's not a lot to hang on to here when it comes to looking at leverage points against this. I'd like to see how this opens, see if we can get a new profile on our 240s, and then use that to scale this down. You know, this has been something that's just been really fighting the market up move recently. Okay. So a couple other stocks that were on the radar screen. We talked about some bank stocks. Let's take a look at the XLF again, and then let's drill down into some of the internals of this. Here's what we talked about with the XLF being the targets up top, 2237, and waiting patiently until we got there for a trading opportunity on the south side here. We closed 2194 yesterday. Right now we're trading 2219, so we're kind of ramping back up a little bit here. But again, I'm looking at this as somewhat of a lid, 2237 on the financials for a trading opportunity on that. I know a lot of people out there are like, oh my God, you got to be buying stocks. You got to, again, you know, this is our S&Ps. This is the March contract still. A lot of people rotating out of this today. But, you know, we've gotten to an inflection point. We can obviously go higher. But, again, keep everything in perspective, looking at the technicals. The long-term trade is still north here. You've reached some targets at 2007. Don't want to get mixed up by totally going short here. But, again, might have reached some targets on the recent up move up from 1975. In what is this? In 1 day, 124-hour period, we ramped up 35, 40 points. So keep all that in perspective. Taking a look at the dollar, we haven't really talked about this too much. We referenced it earlier for you guys that joined us early, but 98 now is going to be the support area on the dollar for this to move higher. This is all relative to what's going on with the currencies. I'm going to revisit this a little bit. We talked about the euro. This is something, again, targets on the south side on the euro. You notice that we were able to leverage off those weekly unfair highs. 109 was a big number for me for a long time. Then we were provided a new inflection point lower, just like we had here at 113.52. That is 113.52, yes. And then this is 110.43. And now you've got these targets down below 107.76. We've reached a low today already of 108.22. So I'm expecting this to actually have breakdowns below 107.76 ultimately. But targets initially to take off some weight, just like the S&P at 2007, are going to be 107.76. Australian dollar, let's see, 74.39 has been that, you know, weekly unfair high. We reached our initial targets. We talked about waiting until we got a retest. Blew up as high already as 75.28. So that retest, I want you to look at this. These retests, let's see, yesterday, in fact, 74.12. So we've already come back and retested some of these numbers, these 74.39 neighborhood, and seemingly have not wanted to be around that general area. So that's really positive for this to move farther north, and that kind of runaway and go back and retest. Again, we talk about that all the time, not getting caught up, you know, buying the high print, just letting the market come back to you. That was the case on the Australian dollar here. Yeah, I saw the New Zealand bank had a surprise cut last night. I mean, this is, the globe is, the commodities started turning. Seems like the U.S. economy's bulletproof with the cooked books on the unemployment report, and everybody's starting to cut rates. Interesting. They did it, so can we. All right, so let me go back to my other server here. All right, so we're going to go in here and do a couple of sorts in the scanner. So on a day like today, and again, we got pre-market activity, which are not completely reflected in the weekly and daily closes and pre-market that we get from interactive data, which populates this. I'm just going to do a quick, simple sort here. Things that are trading below profiles that may have rallied up into the top of our current profile on the daily. Consol Energy, Fidelity National Information Services, and Starbucks. I don't know if, let's take a look at Starbucks, S-Bucks. Okay. SBUX. All right, so, a week that we've, generally been kind of flailing off here, 57.57, pre-market we're trading 57.67. Here's the daily. I'm exactly, just because we had, this is not one. I'm not looking at this as a defined situation. I don't like that one. Let's go into CNX really quick here. Sorry about that. I just looked at that and didn't like it. Scanner's not, it's not immediately just going to put, you got to still look at these things a little bit, and we've got charts in the scanner for that. But I like the way this looks. CNX, we kind of are ramping up in lows, 1250. Crude oil obviously sitting at some inflection points of resistance, and also on the daily we've got 1126. So 1126 and a 1250. I like the way this is looking from the short side for a little bit of a pullback on this energy stock. That combined with crude oil. We'll be right back, guys.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. VIX short term. Somebody asked me to take a look at this, the UVXY. Here we go, 28.30. A little bit of support there on the long term. I'm looking at the weekly here. Looks like pre-market we're trading 29.05. You got some support down here, 29.61 on the daily, 28.30. You know, market could relax a little bit here on the S&Ps. In fact, we're coming off a little bit here off of that number that we looked at before. But again, you know, this is pre-market noise. That 2,750 was just, again, targets. I'm not super interested in shorting the S&Ps. It was just, all right, we reached another level. Let somebody else come to the party late. I think we've gotten in early relative to a lot of things we've been talking about in the S&Ps with our breadth calculations and finding support along the way. That big POC on the weekly there, and then 1975. Hey, let somebody else buy that, and then let's buy the pullback. I think we called this relatively well. And what do they say? Pigs get something and hogs get something. Larry probably knows all those things. So that's kind of my feeling on this. God. So again, that's the situation on the broad market. You know, what ETFs are more than likely going to be in play today? You know, what sectors? I'll be honest with you, man. This utility sector is kind of blowing my mind. I mean, usually you'll have some sector rotations when you have things like that going. I still don't see any reason to take this trade-off. I mean, and you know what the cool thing is? We talked about these 240s on the XLU. And again, this is really wild these are usually this is like the anti-stock market sector. I mean, before, Tom will tell you this. I mean, when the stock market's going down back in the internet days or whatever, and you want to short things, you can't even get them borrowed. Almost the better trade is to go buy something like go long Procter and Gamble. You know, I mean, these are indications that something may be off here, and that gold thing really weirds me out too. It's like, eh. So I don't see the XLU slowing down. I see the XLF coming off a little bit here. As we look at the materials sector, we're going to pull this up, see if there's anything here. I think you've got some, you know, 43.83, got a little bit of a kind of a lid there. I think this thing could relax also. All right. We're going to take a look at my personal adversary here, IBM. Pre-market, it looks like 141.24. Unfair highs, man, this is 140.44. So we've gotten into this neighborhood. You know, I'm waiting for some movement back down below this area. This is one I always keep on my radar screen. We've retraced all the way back up into this particular area, and this is kind of cool because now we've got a place to, as you guys have been talking about, whack-a-mole here on the short side. Not back the truck up, though. All right, we're going to hit natural gas really quick. Let me get my page right here. Please get up before the end of the show. Here we go. Still don't like this trade. Not from the long side. Stay tuned for Larry, guys. All the hosts on TFNN. We'll be back again tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.